Good morning. It's Friday, October 4th, about 6 a.m. Central Time. Non-farm payroll day, and that's my favorite day of the month because, fun fact, I worked at Lynn Waldock from 2002 on until it was bought out, and that was the only day that I was not allowed to take off work. I worked at the largest trading desk, and death, destruction, diarrhea, it didn't matter. You were on the phone calling in those orders to the trading pits. I went on to run the largest metals trading desk over at Lynn Waldock. So looking at the overnight price action in the precious metals, you do have a mixed picture. This comes after a choppy trading session on Thursday with copper tracking those Asian stocks lower. So a lot of you guys were looking at entries on the copper market. Yesterday was that day where it came down to a critical level of support. Now silver continues to hold that level we discussed earlier in the week, that 32.15. We got the breakout above that yesterday. Old resistance, new support, but coming into a non-farm payroll number, a lot of those support numbers are thrown out the window due to increased volatility. What you want to see on the silver market is a close above 32.50. I think that opens up the door for a wider rise in prices. So gold futures continue to be contained by rising interest rates and then the rising dollar. It's rising short-term rates as they reprice in the structure of how the Fed looks on the forward curve to cutting rates. So let me ask you a question. And yesterday I was sitting at a restaurant thinking about this. What happens when crude oil prices go up 8% in 3 trading days? Now they're up another 1.5%. Is that inflationary? Remember, everybody is affected by prices at the pump. That's where they feel it the most. That's where the politicians get the biggest backlash. So what happens when crude oil prices go up 10% in 4 trading days, like what we're seeing right now? Well, inflation goes up, the Fed raises rates, the dollar goes up, short-term treasury yields go up, and what happens to the gold market? It goes down, right? Now, I know what you're going to say. You're going to argue with me. You're going to go, hey, gold futures have been rising with rising interest rates. Well, I could tell you that historically that's been just a bit of an anomaly. Now, I'm not saying that this anomaly isn't a new trend. I'm saying that that disconnect happened in 2022 when you saw the Russia-Ukraine conflict unfold, because 2 things happened. The exports of key commodities in that region had come to a halt. And then secondly, global central banks recognized the sanctions that were imposed on Russia, and they started to divest themselves of the US dollar and other currencies that they felt were unwanted in their holdings. And what did they do? They bought gold as a reserve currency, and gold prices went up, and that's where that disconnect between rates and gold prices occurred. So it's just something we want to keep an eye on, that's all. And then second thing on our agenda, and this was something that we were keeping an eye on, was the dock strike. The dock strike's been pushed off to January 15th. Let the new president deal with that, whoever that might be. So we discussed earlier in the week how a dock strike may run down the supplies of commodities within the United States and slow down those imports. That drives inflation back up, and that could potentially change the trajectory of how the Fed sees interest rates. So remember, just when gold was banging on those all-time highs several sessions ago, that's when 200 basis points of interest rate cuts were priced in. A 50 at the next one, perhaps another 50 by the end of the year, 100 basis points of cuts in the next year. So it's the 200 basis points that were holding gold futures up at that higher level. And then now that gold, the Fed watch tool sees only a smaller amount of interest rate cuts. So if you look at today's CME Fed watch tool, and again, that's something you guys really need to book and just have one of the things you'll look at. You want to look at some of the things that I'm seeing here. You can see that shift, that it's about a 70% chance the Fed only cuts 25 basis points, a 30% chance that the Fed cuts 50 basis points. So you want to monitor that and see how things go as we get closer to these Fed meetings. Now, the second thing here is that, again, it's non-farm payroll day. So that moves the market. It's a lot of volatility. That's why I like it. I grew up watching that number, like many of you farmers watch the WASDE report, or many of you energy people watch the EIA report and live for that on Wednesdays, and nat gas people on Thursdays. So looking at the price action here, markets are starting to drift higher, which could suggest a slightly weaker report coming out. So the non-farm payroll change, the expectations were for 147,000 jobs. The previous time was 142. The unemployment rate at 4.2%, and then that last one was a downtick from 4.3. So that really kind of drove markets back up. Now, something else shifting gears, when I do go out and I think about these questions and I go out and read, I read a lot of reports on precious metals that are written by financial institutions. One thing that stood out to me, and I'll highlight a couple key facts. I don't really look at the opinions that are in there, but I do look at net managed money longs for the CME. They rose to 216 million ounces. This is on the silver contract. That's the highest level since March of 2022. So there's a lot of interest in the silver market right now. Something else I read in that same report that talked about how platinum and palladium, they've been lagging, and many of you trade those products, and they're saying that Toyota's global production had dropped for the 7th consecutive month, and also the EU imposed tariffs on certain auto manufacturers in foreign countries that are restricting some of the parts. So that was something interesting as far as how you get an idea of a bigger picture that might be a drag down fundamentally on price action. Something else I saw that a lot of you get involved with are precious metals miners. People look at silver miners and things like that. They're saying that rising production costs have strained some of the silver supply because of the fact that they're unable to expand a lot of projects and grow revenue. So some of the miners, their free cash flow has gone negative because of those rising costs. So if I was going to look at silver miners and things like that, I would want to look at their free cash flow. And then the second thing I'd want to see is what is the primary metal that they produce, because 55% of the silver that's mined at these miners is just a byproduct of other operations. So many of them are mostly producing zinc, copper, and lead. So you want to monitor that copper market as well if you are a trader of silver. And again, another thing is that 55% of silver's demand is industrial demand, closely correlated to the copper market. So we just want to have a few things on our radar here is what the point is, and this will be a lot of my weekend reading that goes into it. So Ben, back to the chart patterns here. Something else to note, these are just some inside facts on how I run things, is that when you get the price action and it goes at like a 45-degree angle, what we've seen in the gold market, and then we start to curve sideways, so it's flattening out the trend. What that does is it does two things. It sets the stage for a volatility event to the upside or the downside, because we're beginning to consolidate after a large run. Typically, from a chart pattern standpoint, the market generally breaks out and travels in the direction that it was before. So you get the consolidation and then you get the next wave up. You'll also want to adjust your charts where you start looking at, is this a trend breakdown or merely a step back in consolidation? So I think if the gold futures have a correction, it's going to be more of a consolidation, not a directional change in the market. It's not like forming an upside down V pattern. So the silver market is interesting because it's starting to drift higher, but it's really that 3250 level that you want to watch on through the upside and a breakout above that. So a little bit longer video, but I just want to give you some insights on some of the things that I'm seeing here. If you got any questions, give me a call, 312-858-7303. I love to work with you over here. We're a full service futures commodities brokerage firm. And again, remember that futures and option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.